You can see it's 4:07:53 seconds on the 20th of January 2012, coming up to 4:08 by UTC exact time. And I'm just thinking about all the work I've done on financial markets, my research, my ideas, and how I've developed them, and how I'm not yet consistent. For example, I printed off like the good part of 3,000 charts. Uh, and I've saved like 1,000 charts. I have like 600 plus TwitDoc uploads on my KiteFrog Twitter account with all back tests of my trading strategies. On my KiteFrog YouTube video, I've kept a video diary of all my trading mistakes and trading ideas and dissatisfactions and frustration. I have like 549 videos. Like I've had like 200,000 views, and my videos are not very prolific and watched very much. Then I have like my trading diary. It's a nice, I think it's Waterman. This costs like 25 quid. I just spent a bit of money on it, and I've documented how I've developed my ideas. And my first video of my cluster strategy was in November of 2010. That's the first evidence I have of the idea of like aligning market structure with a bullish divergence or bearish divergence. For example, this is what it looks like. If you see a day low in a market that falls on the support of a key support level, which could be a Fibonacci level pivot or support and resistance, with either a downtrend line or an uptrend line from any time frame, be it a medium term or a daily trend line. If you see a bullish divergence that crosses the 30% level, that's unique, that's more than 5%, and it could be the first bullish signal for the day, then that has high predictive value because this signal means there's going to be a price reversal, or it's a leading indicator for a price reversal. And I found with thousands of backtests that when it's more than 5%, it has a high probability of predicting a price reversal. This is where a price reversal is expected, and it's very intuitive. So that's my cluster strategy. And then when you look at my marks of physiotherapy, it was my second degree. So my marks for biology, I got like a 69 or 68.5 average. And biology was tough. You know, biochemistry, physical chemistry, organic chemistry. Physiotherapy was a big Mickey Mouse. Like, in the first year I got a 63 average, 56.1 in year 2, year 3 is 55.5, in year 4, 51.2. But basically, I did a bit of work because I got an 80 right there in human physiology, and I didn't actually have to study for that because I did physiology in my biology degree. But then in subsequent years, I didn't study, didn't buy textbooks, copied a few lectures from friends, just kind of crammed the last second. I did as little as possible to just pass because that was my objective. But then when I did my trading and technical analysis final report, I got 84 out of a class of like 20, 25, and it was the highest mark in the class. So it shows you what I'm interested in. And back then, when I look at my trading strategy, I didn't talk about the divergence of RSI. I only talk about like price on a support level with stochastics getting oversold. So I am clustering three signals together, but in my trading strategy, this section here, here's a quote by General Patterson. A good plan violently executed now is better than a perfect plan next week. Brilliant. So each chapter I added little quotes. I got an idea from a book. But you can see like here, for example, I'm saying bounce on this trend line. I'm not looking at stochastics. There's a double bottom. Okay, look. We did look at a bullish RSI divergence. So here we have a double bottom on a trend line with a bullish divergence. And that's actually one of my strategies because now and this is uploaded at my KiteFrog account like for the 15th of January. You can go back and find it. It's called RSI Reversal Setups, the 10th of January. But I think the twitdoc.com hashtag is PUY. That's where it's hosted. But then one of my strategies, and there's no page numbers on this unfortunately, so one of my strategies is obviously on trend lines, but then there's like double bottoms, and there's a picture of a double bottom here. Yeah, well I got hundreds of charts of that, but I can't find it right now, so I won't bore you with going through it. But that's 64 pages, so clearly I have, and then I've read, this is funny, I got this on the street. It's called the turbulence of the stock markets, their causes, and the Sharia law. It's pure comedy value. Now, without making reference to religion, it's someone's ideology on how the stock markets work and how capitalism is wrong. And it just says that financial markets are all corrupt, no one can get ahead, blah, 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 blah. It's the most biased thing I've ever read. It was a real shocker. And I already got halfway through it before I got sick of it. But I got to go through that again. It's really quite funny. So in terms of what I'm trying to do, like, it's difficult, but it's not that difficult. It just takes so much focus and patience and discipline. Like, for example, this is gold today. This is the 5-minute chart. This is the support 1 pivot where we expect support. You can see we have lower lows here. We have a nice 15% bullish divergence. That's the 4th test of an hourly trend line. And look, we're bang on the pivot right there. And look at the bearish signal. And then we sell off. So that's another one of my strategies. So a bearish or bullishing on a pivot is a reversal point. A bullish divergence on a trend line is a reversal point. And then, like, I follow the dollar index, my hotcom, their uploads, their charts. Here I follow gold, the DAX, which I correlate right here with the S&P 500, which should be right there. And then here I have euro dollar and crude. So these are highly correlated, like crude, euro dollar, and S&P, because they're like risk assets. You know, safe haven assets are like, say, gold and the dollar index. And obviously the DAX, the German index, is a risk commodity. I was going to show you what happened with gold. So in terms of where we expect a price reversal on the 4th test of a trend line with the bullish signal, do you think we held? Yeah, well, let's just go ahead. Look, bang, we're up from like 1645 to 1660. We're up like 17 ticks. I wasn't up so early to catch that trade. And I'm adding little lines for my focus. So the blue line is the 1 minute, the purple line is the 5 minute. So when I update my chart by looking at it and getting a study on it, I drag this to the present. And then when I go to the 1 minute chart, because I look at markets on the 1 minute and the 5 minute interval. So in the 1 minute chart, I've got to see the blue line in the past and drag it to the present. That means I'm doing, like, I'm reflecting on my ability to focus on 6 markets, and I'm keeping track of the longest delay. So I know so then I'm quantifying how good my focus is to get the bugs out of my trading problems. Like here, for example, dollar index is on a pivot, price is going down, RSI's kind of flat, so that's a weak signal, and then we bounce a little bit. Now, I missed a trend line in crude. For example, this is the crude hourly chart. This is like the 6th, 1, 2, 3, 4th test on this trend line resistance. And look, we have a minus 19% progressive bearish divergence. And in the 5 minute chart, so this is the moment for, sorry, we're on the wrong chart. That's a euro dollar. We got to go to crude, US oil. No, it'll be, you can see how confusing this can get. Here we go. So this is crude. This is a 5 minute chart. So this is the big circle for the 4th test of that trend line. Look, we have a long wick just touching it. And look, we have a progressive minus 15% bearish divergence. So do you think we held? So we have predictive value. We have a bearish divergence in the 1 hour chart and the 5 minute chart that correspond to the same place. I call it a high momentum price reversal if it's going to happen. And then if I take my chart off being locked and scroll to the present, crude sells off from 102 down to 90.35. So we're down like 300 ticks. And then in the 5 minute chart, if I just scroll ahead and show you what happened, you can see that. I got to zoom out though to show you that whole range. So this is the same as what I just showed you, but it's a 5 minute chart. So each one of these candles, this red or green candle is 5 minutes. You can see we had like a double top on the 4th test of trend line. We sell off and it's all downhill. And you can see we broke a key trend line there. So I like to trade the breaks of trend lines. And then euro dollar, for example, I look for predictive value. I put this signal which means there might be a price reversal, where a price reversal is expected to happen. Like in euro dollar, here's a naked signal. Look, it's at a day high. It's below this R1 pivot. It's above the pivot level. It's not on a trend line. It's just a naked signal at 1.2989. Like we have price going up and we have RSI going down, and it's down more than 5%. So if I put my mouse on it to get a reading, this is what I've added to RSI. RSI there is 76, and then RSI at the second peak is actually 66. So it's down 10%. So that's a big signal right there. And do you think we dropped? Well, it's okay. Look, it's a naked signal, right? So we did sell off 100 points from 1.2989 to 1.2886. So it's 100 points from there to there. So this is what I'm trying to do. And I've got trendline alerts set for every market for all the major and minor forex pairs, and I have pivot level alerts set and horizontal price alert set for key support and resistance, so that when the alert gets tripped, I get an email so that I can look at that market. And I shouldn't have had my email closed then, because I might have missed a trendline alert. So I don't have any trendline alerts in my inbox, but I did get one this morning on the 1 hour trend line resistance 4th test for cable CAD, and I looked at that trend line, but the pair broke it and there was no reversal signal, so there wasn't a trade to take on. Oh, 3 years of work and I'm not consistent yet. It's like waiting for success. It's not waiting for success. It's taking steps to make success happen and not giving up and focusing harder and trying harder and managing risk more thoroughly and trying to be more disciplined and more focused and more patient and not beat yourself up for your mistakes and never giving up on an aspiration to do something that's very, very difficult to do, basically.